Hello. So far, we have been talking about costs, understanding our costs, and how important it is for business to understand their costs, to control their costs. But we seem to have not touched this topic yet. What do we know costs for? What business can do with their knowledge about costs? So for business, costs, its impact on business goal, which is their net income, is quite straightforward. Higher the costs, lower the net income. Lower the costs, higher the net income. So for a business to survive and get better, they do not need only to know their costs, but they also have to improve based on their knowledge about their costs. Put in a simple term, to keep the good stuff, which allow business to save costs and to avoid the bad stuff, which cost the business some money in the previous period. And how do we do that? First is that we have to know whether we spend too much or not. That's the first thing we have to understand. And the second, we have to see what is the reason for higher costs and what is the reason for good costs, for lower costs. And for example, your business, the cost might increase by 20%. But if the 20% increase was due to material price increase, then your production have nothing to do with it, and your workshop factory manager has nothing to do with it as well. Even we can think about it. If overall raw material price went up by 20%, but your cost only increased by 10% compared to what is should be, then although the costs were higher than supposed to be, but your manager should be rewarded because he saved costs, make the production more efficient. If you don't reward good things and you don't punish or discipline bad things, your costs will sooner or later be out of control. So knowing the costs. And when we talk about knowing the costs, when we talk about too much costs or too little costs, we have to be sure what we are comparing to. We are comparing the actual costs to whatever the cost is supposed to be. And how do we develop this expectation of costs? We have a system called a standard pricing system, and this can be applied, at least in this chapter, to direct material and direct labor. So let's take a look. We start from direct material and direct labor because, as we explained, those are the two most straightforward costs, but they are the most important cost components as well. So let's take a look. For direct material, one important question is how much of direct material to produce a unit of products, and what's the cost of it. What do we mean by this? For example, 2 pounds of plastic will be consumed to make a plastic chair. We've talked about this again and again. What does it mean? If actual product, so with the knowledge of how many pounds of plastic is supposed to be used, we can, based on the production, figure out what is the total direct material supposed to be consumed if everything goes as expected for make certain amounts of products, which was plastic chair we talked about. And if you are managing your costs, you also have to have an idea of what is the purchase price for the plastic, for the raw materials. You should know what the price is supposed to be because you understand the market. Then we decompose this direct material into two things. While we have actual consumption of the cost of the direct material, the standard we are comparing to, we put it into standard quantity, which is developed based on how much, or what's the quantity to be consumed to make 1 unit of products. And then what is the standard price for the raw material? That's our knowledge. So we can compare the actual to the standard one or to the expected to be one, and we get an idea of whether actual cost is too higher than the standard one, which is not good, might not be good, overall not good, let me correct, or it is lower than the standard one, which is a good thing. So the same logic applies to direct labor. Why? Because think about it, we know how many hours it is have to be spent by a worker to spend on one product. Supposed to. The actual time might vary because some might take a slack, some don't want to work overtime, and some work overtime, so they are paid 150% though they are paid 50% more than the regular rates according to the Texas rules. However, so we have these numbers, right? So based on the products actually produced and based on our knowledge that how many hours, how many man hours as labor hours are supposed to be spent on one product, supposed to be. And we also know, also thought about what was the current rate, at least when we developed those standard costing issue, standard rate for wage, standard rate, wage rate for the workers. Different states have different minimum wage and different cities might have different wage as well. So that's something important. So we can compare direct labor, the actual direct labor, how much we spend paid workers compared to the standard hours, which is how many hours are supposed to be spent based on the standard, our knowledge of how many hours should be spent on each product, and multiplied with standard wage rates. So we compare actual labor cost to standard labor cost and get an idea of whether we spend too much or we save some money. However, it's not simple as that. You know, we're gonna talk about this later, but at least we can see if the cost, the actual cost can be higher than supposed to be cost or than the standard cost for several reasons. For direct material, we know how much we spend on direct material is determined by two things. One is what's the price for direct material. The other is how many units consumed, how many units of raw material, direct material consumed to make the products. So if the cost is higher or lower because the price went up or price just went down, then nobody should be rewarded because the price, most of the business don't determine the market price. So if we have a high price, if we spend more, if the business spend more because the price of raw material, direct material went up, then nobody should be punished because that's not their responsibility to determine the price. Nobody messed up and you shouldn't discipline anybody. On the other hand, if the direct material cost was lower because the price was lower, nobody should be rewarded as well because they didn't do anything. They just got lucky for the global market, the price went down. So same reason for direct labor. If the labor price went up, maybe it's marked something like this, or maybe HR people messed up, paid people too much, or maybe it is factory people who didn't time everybody's work schedule well. For example, somebody didn't use their 8 hours a day yet, only worked for 6 hours, but you got another one worked for 10 hours a day. So for that guy, the extra 2 hours, it's gonna be paid 50% more than regular 2 hours. We see that? So when the labor rate went wrong, it can be for different reasons. It might be HR's fault. It might be just somebody didn't, in the workshop, didn't time it effectively. But on the other hand, if the labor number is off because the standard hours is off, then if we look into it, it's supposed to make each unit of products, they're supposed to spend 1 hour, but because of the good work of the factory managers to spend only 45 minutes, then money saved. Then it's a good thing the manager should be rewarded. You see my point? So when we do analysis, when we are comparing the actual costs, direct labor or direct material, to the standard cost or expect to be costs, we have to do some analysis to figure out what is causing those differences and whether and whose responsibility or whose contribution was that, or where the contribution from. So let's take a more specific look at a direct material consumption. So for example, if X units have been produced, so what do we have? The total direct material that is supposed to be used is going to be standard quantity per unit multiplied with X units actually being produced. And the total direct material cost expect to be for this X units, sorry, it's typo here, produced is going to be SP, which is standard price, multiplied with the multiplication of SQ and X, which is total expected direct material or standard material for all the units produced. So we got a price multiplied with units or quantities, we got the expected costs. On the Then we have total direct, so we know how we name it. So for total direct material that is actually used, we have AQ. And for actual price for direct material, we have AP. A refers to actual. So if we do a comparison, right, we do some cost variance analysis, look at the direct material. We are comparing the actual cost of direct material to the standard cost that we developed. So if we take a look, the actual cost is AP multiplied with AQ. And the standard cost is SP multiplied with the product of SQ and X. X refers to the number of units actually produced. So between those two things, between these, the AP multiplied with AQ and the SP multiplied with XQ and multiplied by X, and we can add, we can subtract SP multiplied with AQ, and then we add SP multiplied with AQ. So if you look at this equation, take out the parentheses, you know, this is exactly what we had on the left-hand side. However, this allows us to take the common factor AQ out. We got a AP multiply, subtract SP, the difference multiplied with AQ, and the AQ, the difference between AQ and SQX, which is the difference between actual quantity and expected quantity multiplied with SP, which is standard pricing. So here it seems really straightforward, but you know, to understand the formula, to understand the expression, we are not only talking about we knowing what those represents. We also knowing what they mean by abbreviation. We also need to know what it represents, the substance underlying those, what those capture. So here, if we look at this part, you know, AQ refers to actual quantity produced, and AP is actual price, and SP is a standard price. So overall, so if the actual price went up and higher than expected or standard price, we know this part will be positive, which means they spent too much than planned. However, if this part is positive, it has nothing to do with manager of the factory because the price went up. They don't have any control over the pricing. And then we look at the second part, and here SQ multiplied with X is how many quantity, what's the quantity of direct material supposed to be used for the actual production. And here AQ means the actual consumption of direct material for the production. So if AQ is higher than SQ, the multiply the product of SQ and X, then we know somebody is in deep trouble. Why? Because the actual consumption, which has nothing to do with price at this moment, the actual consumption of direct material is higher than planned. It means somebody is not efficient. Does that make sense? Right? So here, there are two components of the variance between actual direct material cost and standard direct material costs. And if you want to name it, we can call it price variance or consumption variance. Or we can be more be a little bit different, like that this is price variance, has no problem at all. And we can call this part direct material usage variance. If AQ is higher than this part, meaning that they used too much. If AP is higher than this part, means that the actual price was too high. So it allows us, like I said, if AP multiplied, if the actual cost is higher than standard cost, we know it's not good. However, should anybody be punished, be disciplined? Not necessary, because if AQ is smaller than the expected cost or equal to, then nobody made any mistake. At least the factory people didn't make any mistake, because nobody has control over pricing. Only if this part is positive, meaning that the actual consumption of direct material is higher, the usage of direct material is higher than the standard usage, then it means somebody didn't do a good job, okay? So follow the same logic. Let's take a look at the direct labor consumption. So they're pretty much the same. We still assume X units were made, and then for total direct labor out that is supposed to be used is multiplication product of SH multiplied by X. Then we have standard rates for labor, which we expect is standard rates. Then the total cost for labor is we have here SR standard rate multiplied with this total direct labor hours supposed to be consumed to make X units. And then the total direct labor hour that is actually used is AH, actual wage rate is AR. So if we do the comparison again and follow the same spirit, we have this decomposition again, where the first component talk about the variances comes from the price of labor wage, right? Actual rate, subtract standard rate, multiply with AH, the actual hour, we're given an idea. So if this one is positive, which is not good, meaning that you're actually paying too much than standard rate. It can be caused by a few reasons. For example, overall the labor rate went up, then nobody has anything to do with it, right? You just have to take it. Or on the other hand, like we said, for example, in Texas, if you work more than 8 hours, it's going to be considered overtime. And for overtime, the minimum is 50% more than regular rates. So if you have 2 workers, everybody work for 8 hours, 16 hours, so that is fine, meaning that labor is used effectively or efficiently. On the other hand, if you give one worker 6 hours, the other worker 10 hours, then people will end up, the employee will end up paying more. Labor rate will become more expensive because part of the hours, 2 hours, they are using 150% of whatever is regular rates. So this part of positive, the reason can be complicated. On the other hand, let's take a look at this. So actual hours, here the difference in parentheses is the difference between actual hours and as a standard hours for the X units. So if this part is positive, again, it's another reason contributing to actual labor costs higher than standard labor cost. And if this is a positive, meaning that we know for sure or with certainty that the manager of the factory didn't do a good job because while the total hours supposed to be consumed to make X units is a product of SH and X, and the company, the factory, under the monitoring of the factory manager, spent the actual hour was more than that. So somebody is not being efficient. So we call this the direct labor rate variance. It's talked about the rate, and we call this direct labor efficiency variance. If AH is higher than this, it's inefficient. So we pretty much know what we are talking about. So let's take a look at the actual practice. Again, let me go back and remind you, the equations are always easy to memorize, I guess. And what's key, what makes you not forgetting it after 1 year, 2 years, 3 years is really understand what it means, really capture it, knowing the substance. So we take a look. Botella company produces plastic bottles. The units for costing purpose is a case of 18 bottles. So each unit at 18 bottles, that's what we know. The following standards for producing 1 case of bottle have been established. Direct material, 4 pounds at 95 cents per pound. So for each case, it's going to be $3.80, 4 multiplied with 0.95. And direct labor for each case is going to be 1.25 hours at 15 bucks per hour. So the labor cost for making each case is going to be $18.75. The standard prime cost, we explained prime costs are the most important costs. They are the prime cost refers to direct material and direct labor. So the prime cost for making each case standard is going to be $22.55. And during December, 78,000 pounds of material were purchased and used in production. So I will open Excel and we can study it together. So let's talk about actual quantity. Okay, what is actual quantity again? So we know that during December, 38,000 pounds were used. And we also know, so we talk about standard quantity. And how do we figure out standard quantity? We know that 15,000 cases, 15,000 cases were used, right? Were produced, and we know the standard weight. So standard weight for each case is going to be 4 pounds of direct material. So here we are talking about standard quantity of direct material, which is 60,000. Oh, what am I doing? Always. And also we can also figure out for direct material, standard price is, how much is standard price? Standard price is 0.95 cents per pound, and the actual price is and we don't have actual price, but if you look down and we know that the actual direct material cost, why is frozen? We know the actual, if we take a look, we know the actual direct material cost was 75,000 and for 78,000 pounds. So we can come from here, we can gauge out what's the actual price. So basically we divide 74,000, which is a total material direct material cost, by 78,000 pounds. So we figure out, okay, it's roughly a little bit lower than 95 cents we talked about, all right? So let's calculate material price variance. What is material price variance again, and what is material usage variance? So material price variance, if we look back, it's going to be the difference between actual price and standard price, multiplied up with actual quantity. Okay, so here if we talk about price variance, material DL price variance, I should have direct material price variance. It should be the difference between actual price and standard price multiplied with actual quantity, right? This is not good fun. So if we factor in what is our actual price? Actual price was this, something close to 95 cents, and a standard price was 95 cents. We knew for sure, and the actual quantity was this number, 78,000. So here, voila, we have our price variance, and which is favorable. As we can see, actual price is lower than standard price. So definitely it's a good thing, all right? So keep in mind, this shows negative, meaning that this shows $100 variance. It's not a negative 100. What it means is the variance is favorable, is in favor of the business because actually they spend less, all right? So what is direct material? What do we call that again? Usage variance. If you recall, direct material usage variance refers to the actual quantity between the total standard quantity and multiplied with standard price. Oops, I forgot to fix it. Okay. So then we factor in all the numbers again. What is the actual quantity? It's 78,000. And what is a standard quantity? It's going to be 60,000. And we know it's not good. And the price, the standard price, remember it has to be standard price is 95 cents. So if we calculate it, we're going to have a variance of 17,100, which is unfavorable. Why? Because the actual quantity, which was 78,000, was way higher than the standard quantity, 70,000, meaning that they are not being really efficiently using the direct material here. So of course, the total variance is going to be the sum of the the material price variance and the usage variances, usage variance. So the total variance is going to be here, 17,000. So let me do this for direct labor again, and we can call it a day, okay? So for direct labor, what do we have? Let's take a look. The actual rate, and let's talk about a standard rate first, okay? So standard rate is going to be $15 per hour, and the actual rate is how much again? We know the actually the labor cost was, if we hear 315,000 for actually 22,500 hours. So here we can gauge out the actual labor rate. Divide total labor cost, actual labor cost by total actual labor hours. Here we go. So actual rate, not actual quantity, right? The actual rate is, we know that it's in favor because they pay less. So now we have to figure out what is the standard number of hours. We just call it standard hours, and we need to calculate the actual hours as well. So what is standard hours? So standard hours refers to, again, they made 15,000. The standard hours basically is according to the plan, how many labor hours should be committed. So they made 15,000 cases. And for each case, it's supposed to be 1.25 hours. So if given how many cases they made, the standard hours supposed to be 18,750, which is a product of 15,000, the actual cases made, and the 1.25, which is the standard rate for each case, the standard number of hours for labor hours for each case. So what is actual hour? We knew the actual hour already, so 2,500, which again does seem to be positive because compared to the standard, which is 18,750, they spend too many hours. So something is not efficient here. Although the price is good, but the labor rate was good, but the quantity, too much labor were used. So again, direct labor, let's talk about rate variance. I call it rate variance. You can call it whatever you want as long as you know what you're talking about. So equals to what? Equals to actual rate, subtract standard rate, and the difference we'll multiply with actual hours. So if we factor in what we know is actual rate is 14 and the standard rate is 15 and the actual hours used was 22500. So we know that again, this is favorable because actual is lower than standard. This doesn't mean the variance is negative 22500 or 22,500. It means the variance is 22,500 and it's favorable. It's in favor, it's favorable for the business because actually they spend less, right? Just looking at the price. Then let's take a look at efficiency. Efficiency variance, labor efficiency, direct labor efficiency variance. How do we measure it again? We have actual hours, subtract standard hours, the difference will be multiplied with standard rate. Oops, I'm making a mistake. Probably too late. And now, what is our actual hours? Actual hours was 22500, and the standard hours was here 18750, and the standard rate was 15. So here we know again it's positive, it's not good. It means the variance is 56,250, and it means because it's positive, it means the actual labor cost due to the efficiency usage of labor was higher than what it's supposed to be. Too many hours, too many labor hours were used. It's costing the employer, it's costing the business money. So it's unfavorable. The variance is 56,250. And again, if we want to study no total direct labor variance, and all we need to do is add direct labor rate variance and direct labor efficiency variance, and we will have it. So overall, if you look at this, it's still unfavorable. It's positive, meaning that the actual labor cost, total labor cost was higher than expected. So it's unfavorable. The variance is 33,750, and it's unfavorable for the business. All right. Thank you very much.